Jessica Blasingame here with Beam Financial Group, and we're talking about how to pay yourself if you run an S corporation. So S corporations are interesting because you have the option for a hybrid payment structure. So what that means is you're required to pay yourself a salary, so treat yourself as an employee, but you also have the option for a draw or distribution. So let's talk that through a little bit. Let's talk about the salary portion. You are required to pay yourself a salary, a market salary. So you want to set yourself up in a payroll system like Gusto or QuickBooks Online. You'll fill out all the necessary employment forms, get your information in the system, set yourself up with a salary, and then you'll initiate payroll just like you would any other employee. So that's one piece. The other piece is you have the option, once you've looked at your profit and maybe you have some additional money left over in the business, you want to draw some of that money out, you can do that. So you can take a draw or a distribution from the business as well. Really good idea to talk to your tax professional when you're setting this up. So you want to consult with them. They know your personal tax circumstances. You want to make sure you're taking the right salary, and then you kind of know how much you can draw out of the business. So get some guidance there from a tax professional, at least initially. And then it's pretty simple from there. So again, you can pay yourself, you are required to pay yourself a salary. So set yourself up in payroll, initiate payroll and pay yourself a salary. And then you have the option for the distribution, which is just a transfer from your business accounts to your personal account. So let's talk a little bit about the accounting for that. For the salary piece, you're going to see two line items. You'll have a salary or wage expense, and you'll have a payroll tax expense, and both of those sit on the profit and loss statement. And then for the distribution portion, you want to set up a shareholders draw or shareholders distribution account, and that's an equity account. So you'll set up that account, and that's to record the transfer when you take a draw or distribution. So you'll see that transfer sitting on the balance sheet. So again, you've got transactions happening on the profit and loss and the balance sheet. It's getting a little technical, but just remember that you want to, payroll is going to probably go in automatically after you set it up. But for the distribution, just make sure you record it to a shareholders draw account and you'll be set. So just to review, with an S corporation, you will pay yourself a salary. You also have the option for a distribution or a draw. So very interesting structure, and just make sure that you're accounting for things correctly.